You are listening to chartingwealth.com's comprehensive review and forecast for the week beginning Monday, the 18th of September, 2017. We see the week ended with the S&P 500 down 0.34%. The Nasdaq 100, as represented by QQQ, up 0.31%. TLT bonds up just a little bit, 0.02%. And gold down about 0.5%. Let's first jump into the S&P 500. Where did we go over the course of the last week, and where might we be going over the course of the next week as far as our trend following goes? Well, we see that we have not had a change in trend. We're still in a confirmed downtrend. We didn't have a rotation over. What we call a weekly vertical crossover did not occur. Derivative oscillator is still negative, and the price percent oscillator is still below the red signal line, meaning it's negative. It was an up week with a good size green candle, about literally twice or almost 3 times the size, maybe 2.5 times the size of the prior 2 weeks' candles. Did reach new highs. We also have a green wick on top of that candlestick, nothing on the bottom of it. So we see, for the most part, the bulls were able to push the market up over the course of the week. Now, as we continue to move forward, what do we see going on the 2-day chart? 2-day chart reflects the 2-day vertical crossover occurring there at the end of the 2-day candle on the 8th. So we would confirm that crossover on the 2-day candle ending on the 12th. We had followed that by another 2-day candle of up movement above the Bollinger Band, the volatility bands, on the 14th. And then the first day of the latest 2-day candle was very much, it's pretty close to a doji, which means lots of indecision, very little wick on the top and on the bottom. So equal movement across the board. And again, that's just the first day of the latest 2-day candle. The derivative oscillator lost a little bit of its steam, and the price percent oscillator is in about the same place. So it looked we could be having a topping off in the market. Can't call it or know that yet. But we did end the day, even with that up movement, with what appears to be a 4-hour crossover going down. Now, does that let us jump into a down move at the beginning of the week? No. Why? Because our 2-day chart is in an up move, even though the weekly is still in a confirmed down move. So remember, we have to have the 2-day crossover. In fact, we can move our blue line over. We have to have the 2-day and the weekly moving in the same direction in order to have a potential for a trade when that 4-hour chart finishes a pullback and starts moving in the same direction. So we don't have that occurring. What we instead have is a bit of schizophrenia on the S&P 500. That's where we are as we start the week. We'll continue to see what shapes up. Will it be another up week? Might be. If that occurs, might we have a weekly vertical crossover going in the up direction? We could. If we do, we will darn sure let you know what that's about, but we don't call it yet because we don't have it yet. Now, let's keep moving ahead. We're back on the weekly chart. We're going to the Qs. Again, it was up a little bit for the day, 0.31%. And of course, we have 3 weeks of up move, about the same size candles, maybe a little bit bigger over the course of this past week. Derivative oscillators continue to lose downward momentum, and it does appear that the price percent oscillator is now moving a little. It was just pretty much flat. Does appear to be moving up some toward the red signal line. We will just see how that happens over the course of the next week. Our weekly vertical crossover, of course, occurred all the way back in June, about mid-June. And if we look at the 2-day chart, what do we see? Well, of course, we had a 2-day vertical crossover. That occurred back on the 2-day candle ending on the 1st of September. That's when that occurred. And since then, after that candle, we saw the market sort of hover sideways, move up a little bit, but all of that movement is still within the bounds of the big up candle on the 2-day chart on the 1st of September. So what does that mean for us? Well, that indeed means that it could be a topping off of all of that up movement on the Qs. We'll just continue to watch. Again, we haven't gotten as high as we got all the way back on the 1st of September. It's topped off about at that same spot at 146 or so, but not closed above it. So that tells you something, that the market hasn't yet had enough energy to pop up above that. And of course, we see it really reflected on the 4-hour chart, where it has been sliding sideways. And again, it is in a confirmed down move since 4 p.m. on Thursday the 14th, even though throughout the course of the day on Friday there was some up movement, not enough to rotate the 4-hour chart back over. In fact, at the end of the day, the derivative oscillator flipped negative. So interesting to watch. We'll continue to keep our eyes on the Qs and see if anything does offer itself up over the course of the week, particularly as far as a vertical crossover going up. Remember, we're about to get out of these nasty summer doldrums. That sell in May and go away, live to trade another day adage has continued to play out, except of course in bonds and gold, where we've had some beautiful up moves and wonderful movement as we look at the weekly chart. But of course, the fall-winter trading zone kicks in on the 1st of October, and that typically means cleaner, bigger moves. Of course, the one caveat is all market crashes have occurred in October, so beware. At the same time, let's see what trend following leads us to do. And now as we look at TLT, it was up for the day just barely 0.02%. But when we look at the weekly chart, we can see that we had 5 weeks of strong up movement, now a spinning top after this latest 5-day candle comes to a close, and a beautiful up movement that has now decidedly ticked down. Hasn't crossed over going down yet. Derivative oscillator still quite positive, but definitely a pull back. What do we see on the 2-day chart on the bonds? Of course, it blew through the 2-day trend line back on the 12th. We saw the 2-day crossover going down on the 14th. And of course, little bit on the first day of the latest 2-day candle on Friday the 15th, a little bit of up movement, but again, we do see decidedly down as far as that 2-day chart goes. What's up on the hourly? Could things be bottoming? I'm sorry, the 4-hour chart. Could things be bottoming? Yes, they could be. Hit a low point at 4 p.m. on Wednesday the 13th, and looks like it's starting to move up again, but we don't have a crossover yet, so we won't call it, but the derivative oscillator is losing energy, and it does look like these PPO, the price percent oscillators, at least gone flat. So we'll continue to watch and see what we see. Of course, again, when we keep in mind what's up with the 2-day chart crossed over going down, while the weekly chart's still in a confirmed up move, we don't have a trade until the 2-day and the weekly reconcile themselves. So we'll just continue to watch. Of course, we have recommended for a while, if you were in an up move on the TLT, hopefully you got out when we talked about it. Again, you don't want to lose all that you made in that beautiful run-up. Now, lastly, we will go to gold. It was down 0.5% for the day. Gold, of course, has had a beautiful up move. We had the weekly vertical crossover occur all the way back on the 11th of August, that Friday that ended the week. And of course, when we looked at our 2-day chart, we had a crossover going up that had already been in existence. That had occurred on the 2-day chart all the way back on the 24th of July. What we had been looking for was the trigger, a good trigger. We had a bit of a false trigger that occurred back around the 21st or so. Then we had a rollback, and then the positive trigger blew for us around the 28th of August with a jumping in point somewhere at the opening in the afternoon around 123.80, something like that, and went as high as 128.30. Beautiful. Then, of course, once we watched things roll over, we had pretty much a confirmed jumping out point at about 127.35, so a good $4.50 or so of up movement if you followed just the rules. Would have gotten you in and gotten you out and would have been quite beautiful. What do we see going on now? Well, of course, our 2-day chart has not yet rotated over going down, although it seems to be getting very close to that. The weekly chart, as we said just a minute ago, still confirmed up, but with a pullback. It's really that 4-hour chart we're paying attention to. Is it bottoming out? Hard to tell, but if it does rotate back over going up, and the 2-day and the weekly are still in confirmed up moves, look for a jumping in point possibly over the course of this next week. That might be your greatest possibility of a potential practice trade. Folks, that's where we are as we end the week, go into the new week. We'd love to hear from you. You've been answering a lot of emails over the last few days, signing people up for that quarterly chart training. Remember, the latest quarter ends at the end of this month. We will be doing a special training for all of our members at that time. If you would like to be a person who receives that information and that training, you have to go to chartingwealth.com and sign up for our daily market review. What does it cost you? Nothing. It's priceless. Sign up for free. We don't spam that list. It is our list, and we hold it very tight. We appreciate you. We will put you on the list. Of course, you will receive every single day the market is open our training that we do, what we call our daily chart review. You'll receive that in an email to your email box. You'll also receive every day the latest links and updates for the daily market worksheet, the weekly market worksheet, the trade worksheet. There's also instructions on how to use all those worksheets at the training at chartingwealth.com under training. You will find all of that. We have filled out daily, weekly, and trade worksheets and explanations on how to fill them out. If you want to really, well, if you're listening to this podcast and you really want to make it more than just entertainment, you want it to really work for you, spend the 10 minutes you listen to it filling out the daily market worksheet Tuesday through Friday and over the weekend going into Monday, the weekly market worksheet. And every time you do a practice trade, you fill out the trade worksheet at the beginning, throughout, and as you exit, and then an after action, so that you have a beautiful documentation of all you learned during that practice trade. Now, we also have in that same email the link to how to read a stock chart video that literally thousands have listened to, and the layout that we use at freestockcharts.com. All this information is priceless. It costs you nothing. But again, I'm afraid too many people take it for granted and they don't use what we give them. Maybe it's because we don't charge that folks aren't giving it the kind of value that it should be given. We do appreciate those of you who are spending the time and energy in seeing the results, because folks, it takes 10 minutes a day. If you care about your financial freedom in the future, invest 10 minutes a day. Do practice trades as often as you can. Learn all you can. Practice, practice, practice. It's how you get to Carnegie Hall. Practice. Those are the directions. Practice. Thanks so much, my friends. God bless. All the best from the entire team here at chartingwealth.com.